Tyler, you and I both have followed the steel industry and broader industrials for a long time. You and I both invested in different steel companies over the past decade or so, but we haven't really done a lot of videos talking about the steel market and the steel industry here on our channel. But we've got a really huge reason to talk about it right now with US Steel and what's going on.
Yeah, this is a game-changing deal, and we'll see how many references to Billy Joel's Allentown we can get in here.
That'll be pretty impressive if you can get even one. But I'm not gonna challenge you because I know you will rise to the occasion. I'm Jason Hall. This is Investing Unscripted. We're going to talk about what's going on with Nippon Steel's agreement to buy US Steel for a massive premium. We're going to talk about the implications, what it means for the broader steel market, and whether or not investors should be looking to invest in steel companies. Before we get into the details, this video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link. Go to fool.com/unscripted. The Motley Fool is going to give you its 10 best stocks to buy right now. You definitely want to check out that link after this video. All right, Tyler, as we tend to do in these sorts of videos, was massively market moving news. I'm going to pull up US Steel's stock price, and you see when the news came out, US Steel's price has absolutely soared. Today's the 19th of December, so this was announced 16th, 17th. That weekend is when word finally first came out. The stock is generally up a ton. So what exactly happened, and why is this so notable?
I'm actually going to wind the clock back ever so slightly, just so we can get the full context of this. I think right around September, another a US-based steel company, Cleveland-Cliffs, said that they had made an unsolicited bid to acquire US Steel for about $7.2 billion. The deal at the time was about, I think, a 40% premium to US Steel's existing stock price. So it looked like a pretty big price jump from what US Steel was trading at the time.
This is when word came out that Cleveland-Cliffs was interested in making an acquisition. They raised it. They were still trying to push something through in the background. And then you see just massively resetting the market.
Once that initial deal was announced, you heard that the board was talking about exploring possibilities of sales, either as a whole or in parts. And there was, I think, another deal that came on top of Cleveland-Cliffs, but it was a head fake deal because I think 3 days later, the company actually pulled it. There was a private company that made the announcement. But the idea being, all of this really just reset the market on what people were thinking about steel companies at that particular moment with the initial bid for US Steel. And then this one just came over the top in terms of valuation. This was, like you said, it was a Steel said that they wanted to acquire United States Steel for $14.1 billion, and then assuming US Steel's debt puts it closer to 14.9. And just put this in perspective, the deal that Cleveland-Cliffs offered was 7.2. So we're almost double in a matter of a few months how much Nippon Steel wanted to pay for this, which in some ways feels a little absurd, almost in a, wow, that's a lot of money, because it not only has it drastically impacted the stock price of United States Steel, but it's also dramatically impacted the price of almost every steel maker in the United States. It's almost like, I think you and I were talking offline, like whenever an NFL quarterback signs a new contract, it resets the market for that new highs, even if it's not necessarily the best quarterback out there. And that really seems to be what's happened here with this US Steel deal, in the sense of, hey, if US Steel, the third largest steel producer in the United States, and not even necessarily the most profitable, is worth this much, then how have we been underpricing these other steel companies?
Yeah, it's definitely reset the market. And that's interesting because if you think about the steel market, number one, it's highly cyclical, right? I think this is an important topic if you're interested in investing in not just the steel industry, but any of these industrials. You have to understand that the cycles have a major impact on their bottom line and their top line, where you can have demand can soften from one quarter to the next. Maybe you have automakers. The auto industry is a big steel buyer, obviously. If the auto industry starts to pull back, steel demand goes down, guess what happens? Those steel factories, they have to slam on the brakes and slow production very quickly. And that's hard to do in that industry. And it almost always results in substantial losses as the steel company tries to slow this massive machine down and have these really high fixed costs that are really hard to flex down. And then go from very profitable to losing money really quickly. So that's a challenge with the steel industry in general, is making sure you understand where we are in the cycle as an investor before you buy or before you sell. And when you have something that comes out of nowhere like this, that kind of resets the market, I think it can create a dangerous situation for investors.
Yeah, To me, it's hard to really look at steel through the lens of the steel and being like, is everything undervalued and we should be buying it? Because at first blush, it looks like Nippon Steel is paying a lot of money for US Steel. And as we mentioned offline, like maybe they're adding a little extra money to the deal because they think there's going to be some regulatory pressure. So maybe if we pay a little bit extra, that'll help that go away.
Right.
There's also the component of domestic demand in Japan. That's been a pretty morbid market for quite some time.
I think about 60% of Nippon Steel's production is in Japan. So they've been steadily trying to increase their exposure to other markets. And it does certainly feel like they're paying up to really make a big step into the North American market.
Yeah, and the North American market, as much as it's cyclical and all that other stuff, there are some advantages to the United States market in particular relative to some of the others because over the probably like past 50 years or so, there's been a lot of basically trade protection tariffs that have gone up, anti-dumping measures in steel that have basically helped domestic producers. It started with some targeted tariffs under the Obama administration. They became more blanket tariffs under the Trump administration, and the Biden administration has more or less just kept the whole thing going. And so the domestic steel market is a little bit more protected relative to, I would say, some of the other ones, simply because a bit of a lobbying effort from the steel industry, but we're a little bit more acutely aware of kind of the dumping policies that have been happening from other steel producing parts of the world that have maybe a little too much production capacity. I don't know, somebody like China. And so there's the idea there that Nippon Steel is getting in here because it's a pretty dynamic market. It's a pretty profitable market. If you look at steel producers over the past couple of years in the United States, even before the supply constraints time of COVID, where goods prices went through the roof, even before that, several of these companies were pretty profitable. If you look like at somebody like a Nucor or Steel Dynamics, they were all posting record profits in 2018, 2019, things like that. So this is overall a pretty good market to sell steel into. And so you can see why Nippon Steel wanted to get involved in the US market. Whether or not that should change you, I, or listeners' view on investing in steel, that's a little less certain, right? Because, like we said, this is a big number for US Steel.
As we wrap this up, let's pivot to that next. Looking forward, thinking about retail investors, individual stock buyers. We have very different reasons that we might want to buy stocks than, say, Nippon Steel does, right? That's trying to diversify its business, is trying to get into the US market and is willing to pay a premium to do that. We've certainly learned as individual investors, paying a premium for steel stocks has rarely ever worked out individually. So looking at the steel market right now, thinking about 2024 and beyond, I think you have to look at this as a multi-year investment for the steel industry because we're not at a clear bottom, right? If we were at a clear bottom, a lot of times those are opportunities to move quickly and take advantage of just the market normalizing, and you can make pretty good profits. But we're not in one of those situations right now. Do you think the steel industry is a good place for investors to be looking? And if so, where would you invest?
I would very much put steel on a watch list right now. Like you just said, it's a pretty good time right now. Automotive has been humming along pretty good, but we're starting to see some weakness in automotive production. You've already seen like production has been mitigated a little bit from some of the larger auto manufacturers. Higher interest rates is going to impact construction. So there are some things starting to blow against the steel industry a little bit. Like you said, steel is in an industry you want to buy when it's in the dumpster. And it's not in the dumpster right now. And I own three steel companies. I own Cleveland-Cliffs, I own Nucor, and I own a Latin American one, Ternium. I have no problem investing in steel, but I don't know if I would be investing a lot in US steel production right now based on current valuations.
Yeah, I'll add one name to the watch list that I think investors should be considering. I agree with you broadly. I don't think this is a time to be chasing after the market here. There's a lot of traders right now that are looking at the momentum and trying to seize the opportunity, maybe thinking about the next acquisition target. And I think that's a foolhardy move for individual investors. But I would say add to that watch list that Tyler's talking about. I would say add Steel Dynamics to it. This is the youngest of the large US-based steel makers, and they're pretty focused on using the electric arc furnace model. So they have a variable production. So they're able to really vary their output and lower their operating costs
Baby
when the
Nucor.
cycle turns. It's a baby Nucor, right? That's the way to think about it. And there's some big benefits to that. If you're in an industry that has really high fixed costs, is very cyclical, having variable costs is a massive advantage. Steel Dynamics also makes some really high quality, high value add steel. So there's some benefit that you have there. So I'd put Steel Dynamics on that watch list. And I think we're going to see the market eventually. It's going to correct on steel makers at some point. I'm not calling for a downturn here, but I do know at some point it's going to happen. And when it does, then it's going to be time to act and act aggressively. Now's a good time, Tyler said, to build the watch list. So Tyler mentioned Nucor, Cleveland Cliffs. I mentioned Steel Dynamics. And then, of course, we've got Tyler's weirdo Latin American steel company, Ternium, I believe is the name, right? Ternium?
Yes. It's not weird.
So get that watch list together. Be ready to act when the market gives you an opportunity.